Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes. You're going to want to go ahead and text the word BRIDGE to 623-AZ-RECON. That's BRIDGE to 623-AZ-RECON. No, we are not in the business of selling bridges, which would be interesting, you know.
Yeah.
I don't know if there's a market for that.
I'm sure there is.
I know for engineers there is.
But, Justin, one of the things that I think that we specialize not only on this podcast, but our teams, you're on the mortgage side of things, Ryan and I are on the real estate investment side of things, is just, being very creative on how do you expand your real estate portfolio? Where can money come from? How creative can we get with money? And I know you wanted to talk about bridge loans, so briefly explain a bridge loan, and let's get into the strategy of it.
Yeah, so it's just a really big topic right now. The calls keep coming in about bridge loans. So what a bridge loan does is it takes the equity from your current home, which you plan on selling, to apply that equity, a portion of that equity, to a new home purchase. Now, it's basically convenience fees that you're getting here. You're going to be paying convenience to do that bridge and obtain that new home without counting the current home's debt against you or that loan against you.
Or having to sell that home first.
Because
when you have a home that you're going to sell, and you're wanting to buy home number two, you need that equity, but a lot of times buyers of home number two are not going to take contingency offers. Correct. And so forth. So this really solves that problem.
Yeah. And now, majority of the individuals that we get in the door looking for bridge loans have money. They have, typically their home is paid off. They're looking to pay off home number two. However, most people don't understand that you have to actually take a loan out on home number two in order to do a bridge loan. That's where a lot of that's where we come into play. They're wanting us to do loans, so they're offering this money in order for us to do loans. So if you're looking to pay off a house for your next home that you're looking to buy, this is not a product for you. A lot of these people that do have money, we like to use HELOC loans instead of these bridge products.
I was about to say that.
Because bridge loans, they're very expensive. So typically we're looking at about 2.4% of your sales price of your current property, not the amount of money that you're actually using to purchase this other home. You're not paying on that money. You're paying on the sales price of your home. So it can be very pricey. Last individual we spoke to had a $2.1 million home, paid free and clear, was looking to move out to Arizona and purchase a home for $750,000. Just wanted to take the $750, apply it towards the home out here, and he was dead stuck on bridge loans. And I started talking to him about closing costs, and that got him off the subject real quick. Because those HELOCs, you're just paying on the home equity lines of credit. Yeah. You're just paying interest, and you're paying very little closing costs. So the cost is very cheap to do that transition, but we do have 5 different bridge loan products. The guidelines vary on it, but what you can expect is if you do need to take advantage of a bridge loan product, you're probably only going to be able to take about 80% of the home's value, and we would have to subtract any other mortgage that you had on the property or any other lien, and they're going to put a new lien on the home for that bridge, and I expect to do a mortgage on the new house.
All right. If you'd like some more information about bridge loans and would like to talk to Justin and his team and see whether you're a perfect candidate for a bridge loan or you'd like some more understanding of what it is and how it works, go ahead and text the word BRIDGE to 623-AZ-RECON. That's BRIDGE to 623-AZ-RECON.
So I guess spell it out a little bit better for me because I'm hearing...
Because he's slow.
Right, yeah. Explain it to me like a fifth grader because, well, that's probably like my capacity. That being said, we break down, we ultimately have 2 options if we're trying to accomplish door number 2. What would be the real benefit of me doing a bridge loan versus a HELOC? Because they're both going to require 80% equity. They kind of cross that Venn diagram.
Good question.
You know what I mean? So
yeah.
what's my strategy? Why would I go with a bridge?
So these work for these are specific for very few people out there that these are actually a good product for. So the ones that I find this working perfect for, you're retired, you're on Social Security only, so you can't even afford the home that you're currently in. And let's say you have a mortgage on the home you're currently in, and you're looking to downsize to a home in Sun City, retirement community. Now, if I'm doing a HELOC, I have to qualify you on all debts: new house, current house, home equity line of credit. I have to use all those for you to qualify for that new home. If I'm doing a bridge loan, you're getting a purchase guarantee on the property. So they're going to guarantee that they're going to purchase your property. So I don't have to hit for the current mortgage on your house, the money you're borrowing at 0% on the home, or excuse me, on the bridge. I only have to hit on your debt to income ratio for the new home. So we can eliminate all those liabilities just by that purchase guarantee with a bridge loan. So it works out perfect for people.
They're a lot more lax on the qualifying side with
Correct.
bridge loans, whereas HELOC, they're going to process and underwrite it just like they would a conventional product or something like that. Now, does let's take your example, and an elderly couple's wanting to move over into Sun City. Does it matter if they have like a negative AM loan on their first?
No.
They could own it cash, they could own it conventional, VA, neg AM. It doesn't really matter what type of product they have in place.
Doesn't matter what product they have in place. It matters what product they're getting on a new property. So we can't do a VA or an FHA. We have to do a conventional loan on the new property. Yes.
Okay, that does make a lot more sense, because there's a lot of folks that are stuck in that position and would need that option in order to be either competitive in the marketplace, but especially if you are an elderly couple, doing the double move can be very, very challenging.
Taxing. Yeah.
So
Yeah.
I see a huge benefit on that. Okay, cool. I got it.
All right. If you'd like some more information about bridge loans and also HELOCs, there's a gazillion types of HELOCs. We can advise you on what's probably the best option for you. We have people that specialize in HELOCs. And more importantly, you want information about bridge loans, go ahead and text the word bridge to 623-AZ-RECON. That's bridge to 623-AZ-RECON. You know, Justin, I want you just to walk us through the process, because here's what I don't want our listeners to do. Is based on your explanation and based on that scenario, for them to just go ahead and make up their decision what is the best option for them. Having a conversation with your team is a free consultation. You're able to ask more questions and really help people on the path of what is the best option. Walk us through what that process looks like.
And I love it. The process it speaks for itself. So what we want to do is we want to get you to put in an application with us, just a standard application for the new home purchase. And basically, we're going to break down everything as far as your income, what assets you have. We might even give you ideas with your own assets on what you can do. This has happened too. But based on what you're putting in, we're not going to, if a bridge loan, you qualify for a bridge loan and a HELOC, we're not going to just go straight to HELOC. A lot of times we'll put in the full application for the bridge loan, just so you know what you qualify for, what it looks like, what the costs look like. And then we'll lay this other HELOC down right beside it, explain the benefits to each one of them, and the negative portions to each one of them. Typically that comes with cost. And then we're going to let you decide what you want to do, but we're going to actually show you which bridges you qualify for, what those costs look like, what the terms of the bridge loans are. So big thing is, a lot of times with bridge loans, they're going to want you to sell your home within 120 days maximum. And if you don't sell it within 120 days, they're going to purchase your home, but they're not going to give you that full value of what you think you can sell your home for. They're going to give you a lower one. Yeah. And then they're going to pay you back money. But really, it's getting the application in, getting your documents in, just so we can filter through it, send it over to these broker avenues where we can find out what you qualify for on the bridge and what they're willing to offer you really on paper.
And finding out what you qualify for and going through this process doesn't commit you to anything. No. This is what people need to understand. It's a matter of getting presented with your options.
Correct. It's education. And we're doing the soft pull credit on all of this. We're not pulling hard credit, just so you know what you're getting into. And then if we decide, hey, we want to go after this specific product, then we'll start going into hard inquiries.
Well, due to the fact that the bridge loans are a little bit easier to qualify for, is it safe to say that if I'm qualifying for a new home, then you're probably going to qualify for all the different options as far as bridge loans?
Yes. You're probably just
what would be the exceptions?
There's not really any exceptions to it. If you're qualifying for the new home purchase as a conventional loan, you will qualify for the bridge loans. Now, people just get information that they don't want to hear. My house value, this is the amount of money that they're going to give us. You got to be prepared. You know, the investors are trying to make sure that they're going to make money here. And they're going to be conservative. They're not going to lose money on this transaction.
Got it.
All right, if you'd like some more information on HELOCs, more information on bridge loans, would love to have a conversation with Justin and his team. Strongly encourage you to text the word bridge to 623-AZ-RECON. That's bridge to 623-AZ-RECON.